8 on Newstalk.
Thank you very much, Nolene. The prospective sale of Blanchardstown shopping centre was announced last week. Estimation set at about €1 billion for the complex and surrounding lands. Green Property Group, an Irish company, is selling on the centre. It's one of Ireland's best performing retail assets, and bids are expected to come from foreign investment firms all around the world. So, why is the shopping centre being sold right now, and is this a process that's going on all around the country? To answer this question is Larry Brennan, Head of Retail with Savills. Larry, good morning and welcome.
Morning, Pat.
Now tell us a little bit about Blanchardstown, because, it's a pretty impressive asset.
Yeah, it's a stunning scheme, a really true town centre, I think it's fair to say, with a mix of retail, leisure, retail park. Tremendously successful, commenced trading in 1996, and has really all the brands. And yeah, it's a really, really good asset.
85 acres, 176 shops, 20 restaurants, 2 retail parks, multiplex cinema. It's pretty huge, and it has great anchor tenants.
Yeah, sure, and stunning, great rent roll, and it's a very large asset, and they are things that are very, very difficult to find.
Debenhams, Dunnes Stores, Marks and Spencer's, Pennies, so it becomes a destination.
Yeah, absolutely, and I think if you go there, you'll see that it does serve that true town centre function. It's busy from 9:30 in the morning through to late at night. It's the focal point of the area of the town of Blanchardstown, and yeah, it is the city centre, it is the town centre.
Yeah, even though it's kind of one-sided, because there's the hinterland out into County Dublin and then on to Meath, behind it, which hasn't really been developed out towards Clonee and places like that. But that probably will come in time.
Perhaps.
Farmers will be flogging off their fields when the good times roll again. Now, the estimated price of $1 billion that's been talked about, that would represent a 5% return then, given the rent roll at the moment.
Sure, but
is that seen as good?
Well, I think a couple of things you have to bear in mind. A, it's future potential for the scheme. What we're seeing at the moment is, in terms of the retail economy, all the indicators are very positive. Savills are certainly predicting, and our research is showing that we're getting back into rental growth again. So the passing rent, you would expect some growth in that, which will improve your yield.
Depending on when the covenants run out and have to be renewed, all of that.
Exactly. And when rent reviews occur. But also there's development sides as well, and there's a proposal there for further extending the scheme. So that again has to be factored into the price.
How much interest do you think there'll be in Blanchardstown?
Well, genuinely, from our experience in the investment market, it's invariably very, very strong. We saw the bidding that was there for Project Jewel, which was a loan sale connected to other retail schemes. So it was a different type of product. This is a direct property sale. So we would expect to be considerable. And also our experience is scale really, really matters. There are very few €1 billion deals worldwide, never mind Europe-wide. Yeah, it's something. So this is something that's genuinely going to be sought after. We'll invariably see new bidders. Again, the dual process, nobody could have really predicted Hammerson would arrive into that, and it was a bit of a surprise. So I'd expect you'll see new entrants.
And the underbidders for Dundrum Shopping Centre and the rest, are they likely to be sniffing around at this?
I'm sure perhaps they will. I can't speak for every one of them. I wouldn't know. But again, the finance world is very fluid. That money could have gone elsewhere, but there will be others there. There are specialist REITs, there are specialist shopping centre funds.
If ordinary mortals could borrow that kind of money, if you can borrow money, given European Central Bank rates, a couple of basis points up on, the as a margin. We all could make a fortune on this. 5% return, borrow the money at 2.5% profit while servicing the loan. It's a no-brainer, but of course ordinary mortals can't do that.
Well, it could well be an Irish pension fund provider who'll buy this. It could be a blend of Irish pension fund providers who'll buy it. So yes, I'm sure there may well be an opportunity for us mere mortals to get involvement.
Of course, the big opportunity for the new owner will be development. How much development potential is there to add to the floor space that's currently there?
Well, the Yellow Mall extension was planned at around 300,000 square feet to take in extra shops and an additional department store. So as to whether that's the route to go, but it would appear certainly that the scheme is capable of taking additional floor space.
Yeah. And if that is, it is part of the package, it means that you're effectively if you're satisfied with a 5% return on the existing assets, effectively you're getting a site for nothing. A development site for nothing.
Yes, that's one way of looking at it, absolutely, yeah.
Yeah. What's going on generally, though, in retail? In the big complexes, we know they're being populated by a lot of international brands, be it Zara, and of course Primark is an international brand as well. Is this kind of shopping taking over from the retail in the high street?
Well, Ireland is an unusual market insofar as the high streets are very limited here anyway. We've got Grafton Street, Henry Street, Patrick Street.
Yeah.
You know, it's not a high street dominated market as you'd have in the UK. So it's very, very much shopping centre focused.
What we have, I suppose, in the towns and villages around Ireland is Main Street, which is a different kind of animal.
Yeah, and invariably are small, they're fragmented, and shopping centres allowed multiple retailers go into these towns because otherwise the property stock wouldn't have taken them. So it is a very, very different market than what you'd see elsewhere. But yeah, what we're seeing is retailer confidence is back very, very strongly. Indicators are good. Employment's a huge driver of the retail market. And your
money in your pocket, you spend it.
Exactly. And saving ratios are dropping. Like all the indicators are pointing in the right direction.
But what are Savills predicting about shopping patterns? We know that a lot of people migrate for certain items online.
Yep.
Also, people have migrated out of town centres, the old-fashioned town centre, into the outlying free parking, I suppose, retail parks, as we know them. I mean, what are Savills predicting for the way shopping's going to go in Ireland?
Well, two things. The online side of it, yes, is going to have an impact and a significant impact. But again, we see retail, as in property, blending with your online channel, that you become an omni-channel retailer. I don't think there's any such thing as bricks and mortar and online.
Yeah.
They do blend. And there's more and more online brands actually taking floor space at the moment because your shop is your showroom, it's your returns destination, it's part of your distribution channel, so it's a vital part of everything. It will have an impact, and perhaps store sizes are going to change and chains will reduce in size.
I noticed that Dixon's Carphone Warehouse Group, which includes Currys and PC World, they're talking about amalgamating their stores. They've already done it in Carrickmines, where you've got PC World and Currys being one store now, and they're going to do much more of that right across their network. So, and yet no jobs will be lost, which is in other words, better quality of customer service in a bigger unit that has everything.
Yeah. And ironically, they've also are pursuing a flagship opportunity in London at the moment because they see the need to have flagship presence to go with their so even if they never made a quid from the flagship presence, it's important to have it. Precisely. So it's all part of that.
And are there many retailers who do that, who maintain paying high rents on Oxford Street because they have to be there?
Yeah, it's a vital part of your branding. Oxford Street, as it happens, is a phenomenal trading location anyway.
Yeah.
So they'll make money, but I'm sure there's some retailers on Fifth Avenue paying
rents that do not, that just are not sustained by the business. The question of being overshopped. I mean, small retailers will obviously complain that that their local council is charging for parking on the streets. You go outside of the out of town centre and there's no parking charge, that kind of thing. The question is, are we going to be overshopped in a way? I mean, we're looking at Carrickmines. Heinz are going to develop Carrickmines both residentially and Cherrywood, rather, which is right. It'll run into Carrickmines effectively, because they're talking about how many Lewis stations along that stretch, 4 or something like that, some of which are not open at the moment, but they all will become one long strip of development, which will impact on the existing Dunleary, will impact somewhat on Dundrum. Is there any end to the amount of shopping that we're going to do?
Cherrywood is a separate conversation perhaps, but that's again is very much built on the SDZ there, bases the retail demand on the housing that goes in, and it's also been quite prescriptive in terms of retail warehousing is in Carrickmines, and shopping centre and the town centre part is in Cherrywood. So that's thought out a little bit.
In fact, they refused, didn't they, to allow the kind of shopping centre stuff into the Carrickmines development. So it's furniture, it's woodies, it's...
Yes, and there's no bulky goods shopping in Cherrywood. So that is thought out. And I think the biggest problem comes in terms of over-shopping is if you look particularly in the regional markets, where you have towns, where you have local authority areas that collide. And there was a bit of a race to provide retail space. So you have towns such as Carrickmines, you've towns Carlow, you've got Drogheda, where you have adjoining local authorities.
And they didn't talk to each other in terms of the planning they were giving.
Well, they certainly, when you look at the scale of development that's in there on either side of a county line, you take Drogheda, for example, with 4 shopping centres and 2 retail parks between Meath and Louth. That's where the challenge is going to be to mop up this.
Was it that
space.
The local councils were just vying for the development levies that these shopping centres would generate? That they get a big payday.
Whether it's rates income or development levies, or providing services for their people on their side of the county line, whatever the rationale was. But that tends to be where you got a bigger provision of space.
Are we hung up at all on ownership of green property or getting out? You might answer me the question, maybe your personal view as to why they might be getting out.
I think they've done 20 years of pretty good work in a.
So it's cash in time.
Perhaps, or as I say, it's back to development time again. It's beginning to make rationale, and whether they are themselves set up whether they feel themselves set up again to go on develop that.
Free up $1 billion, pay off your debt, whatever's remaining, and then develop again, that sort of thing?
Perhaps, or change asset type, or whatever their strategy is, I don't know.
Or move to Monte Carlo, who knows?
Who knows?
But the business of who owns our shopping, I mean, should we be concerned if external landlords own pretty much everything?
Retail shopping centre ownership tends to be a pretty international business.
Yeah.
If you again look around Europe, we're heavily involved in Europe, and you have giant companies who tend to own these schemes, and you get the Westfields of these worlds who'd be a worldwide shopping centre owner. So it tends to be on that basis. But that said, there are still some very strong Irish schemes in Irish ownership, Crescent in Limerick, for argument's sake, or other developments which are Irish owned and incredibly well run.
Yeah. How much have they suffered over the time of the recession? I mean, units closing, therefore rents evaporating.
Yeah, again, my experience was that the Irish landlords actually worked pretty well with their tenants and really focused on keeping schemes trading. And we never really had a huge vacancy issue, but there may have been people in there, again, with rent
I remember
arrears.
at the beginning when everything was going pear-shaped that people in Grafton Street, for example, were complaining about big international landlords who had billions on their rent roll, and even Grafton Street, we see it as the flagship.
Yeah.
But it was just a full stop or a comma on their accounts. It didn't make any. So they weren't doing deals.
No, but that said, we've had 10 years into this at this stage, or well, not quite, maybe 8 years into this at this stage. So there's been an awful lot of water under the bridge, and we've had, unfortunately, a lot of retail examinerships, some failures. So yes, an awful lot of that legacy rent issue has been washed out.
Okay, and are rents more realistic now, or?
Yeah, but again, from a base level, yes, back considerably. Rents dropped by as much as 60%.
So if you had the wherewithal to get in and your business survived, if you rented for the first time in the last 4 or 5 years, you did well.
Yeah, or a lot of, again, Irish businesses got in and blended their rental profile, where they had some legacy rents but got some new leases as well to
using examinership sometimes as part of that process,
or just acquiring and expanding. So yeah, it's been a very interesting few years.
So for retail, happy days?
Hopefully so.
All right. On that note, Larry Brennan, head of retail with Savills, thank you very much for